In the end, Bitcoin did pretty well. Based on our on-chain data, I think it's still in the bull market. You can say the same thing about the stock markets now too. A lot of buyers lost money during the tariff chaos. I really enjoy bull markets, like this one, where the stock market is rising. As we climb a wall of fear, it's great that this time around, the market hasn't been an unhealthy bull market, like it was from 23 to 24. The market is now spreading out. The things Cathie just said are very true. The market isn't just getting bigger, but now there is a laser focus on certain projects that are giving us great results. More and more people are interested in this blockchain hashgraph type technology because they know it will change the way the world works, whether it's through real-world assets, tokenization, or just financial tools that make people's lives better. And a huge amount of very smart money is pouring into the crypto area, especially into certain projects. I like XRP and HBAR at the moment. An important part of the reason for that is what Cathie Wood is going to talk about in today's video. So, that's why I'm giving you this brand new update from Cathie Wood, in which she talks about the big market reset and what the future of blockchain and cryptocurrency is likely to be like. I think things are going to look really good for XRP based on this information. You probably already guessed that. I'm really excited about what the future holds here. Yes, hit the like button so that the whole XRP army can see this. Now, let's get to it. It's our hope that we can end this rolling recession with some certainty about tariffs, the tax package, or the big beautiful bill. We also think that we can start moving forward from a rolling recession. We think that the recovery will pick up speed as we move from this year to next. With productivity, which was a big surprise, and real GDP growth both improving. The other surprise, we think, is that inflation will be much lower than we thought it would be because of how productive people are. A lot of people now think of real GDP growth. It is true that when growth is high, inflation is also high. Based on past, that's not true at all. Productivity goes up when growth goes up, and productivity is a strong force that fights inflation. We think that will be the case this time, maybe even more than before, because of all the negative factors that are at play, with all the new technologies coming out all the time. Especially AI, which is, as we've already talked about, very deflationary, good deflation. The more prices and costs go down, the more units are sold. That's how recessions end, or in this case, a rolling recession does end. And we don't think this time will be any different, except that it will be bigger than usual. We believe that things are changing now. We also think that the shocks might be on the low side of what people thought would happen, which would mean that the deficit would shrink as a share of GDP. More than people thought it would. You can see what I said about M2 here. M2 is getting close to 5% growth. That's what this purple line shows. Look at this map to see how rates have changed over time. Even that rate is lower than what we've seen in the past. Also, this map is interesting because it shows M2 in the 1960s and 1970s. Rise from one year to the next was faster than inflation. It was able to handle all kinds of government spending. You can see that this has moved up by 18 months. If we're right, the rate of inflation will go down, and the trouble that's been going on, which I think Treasury Secretary Besant has been trying to avoid, is that we don't want to go back to the accommodation time of the 1970s, which caused terrible rising prices to reach double digits. Things will be a lot more like they were in the 1990s if we're right. Money growth will be higher than inflation, and inflation will actually be going down. That will mean that money is moving less quickly. Now, I know that the velocity of money has been shown on charts before, but it's been going down since the secular fall. The growth rate had been slowing down for a while, but it really started going down in the late 1990s, with only a few short-term ups and downs. We just got over the cycle bump, and now the speed is beginning to slow down again. That trend is important because of this. If it's still in place, money growth at this rate is not a problem in terms of making inflation worse. Speed is how fast money changes hands. And why would it go down? If we're right, and prices go up, is much lower than projected, and interest rates will follow. People will then think, well, I don't need to buy anything right now because inflation and interest rates are going down. There will be more than 1 billion active users in the crypto space by the end of this year if the current trend of people adopting crypto continues. Please give that some thought. A little less than 1% of people in the world have any XRP at all. Not even 1%. So picture what will happen when all of a sudden 15% or more of the world's people are in the crypto area. Think about how many of those people will buy XRP. The numbers are so big that you can't even begin to understand the scale of magnitude we're talking about. Numbers that big are hard for everyone to understand. My prediction, though, is that XRP will be one of the best drivers because of this huge growth spurt. Now, what's the reason for that? The first reason is that it's set up to be a tool that everyone can use. Now, very rarely in history have we had tools that didn't really help in the real world these days, but actually work very well. To be exact, there are a few cases. Gold is expensive because it is a store of value, so this isn't really a good use case for it. Yes, it can be used to make computer chips and other similar things. But it's probably one of the few things that everyone agrees is a good way to save money when times are volatile. We should really look at the cryptocurrencies that solve real problems and add value to society. Bitcoin might still fit into that category. XRP is great. The H-bar is also great. And I think those ones will do amazingly well compared to the rest of the market, especially since this grow curve is so steep. What else does Cathie would have to say? I believe many of you haven't heard it before. I'm going to play that quickly and then move on to what I think is the most important part. The video for today will be announced near the end, so make sure you stay tuned for that too. Let's talk about that. We've been going up a wall of worry. There has been some instability in the markets, but a lot of people thought that tariffs and the fight between the Fed and the president would really shake things up. But I think these are the types of bull markets that last the longest. Because of all the trouble, when the market goes up, there is a clear message being sent. And I believe that it is that interest rates are likely to go down. And I think that housing numbers are something that a lot of people aren't paying attention to when they look at the inflation numbers. They get in there after a long delay. The change or concentration toward just a few stocks, which we think was a very bad sign of a bull market that's changing, and the market is getting bigger. Also, I believe that lowering rules is one of the most important things that this government is doing. This idea that we've been in a rolling slump has been pretty stable. When interest rates went up in 2022, the housing market crashed, and it hasn't recovered since. In fact, it's kind of going down again right now.